Welcome to the Deep Dive. Today, we're jumping right in, diving headfirst into something really core to market analysis, identifying support and resistance zones.
That's right.
And we're not just talking simple lines here. Think dynamic areas, zones really, that show you the hidden tussle between buyers and sellers on a chart. It's honestly kind of a shortcut to understanding why prices actually move the way they do.
Yeah, absolutely. And what's really interesting is how grasping these zones can fundamentally change how you read price action.
How so?
Well, they're key indicators. They give you a much clearer lens, filter out some of the noise, and help you spot patterns that might just look like chaos otherwise.
Okay, so let's unpack that core idea then. Sources often say these aren't just thin lines, but actual zones you see on candlestick charts.
Exactly. Areas where price interacts repeatedly.
Right. So support is where price seems to bounce multiple times, like an invisible floor holding things up.
Precisely. And resistance, well, that's the opposite, isn't it? It's where price hits a kind of ceiling and then pulls back. It caps the upward movement.
So how do you spot these visually? Are there clues?
Definitely. You want to look closely at the wicks on the candlesticks, those little lines sticking out.
Okay.
Long lower wicks, for instance, often flag strong support. It tells you buyers really jumped in there.
Push the price back up.
Yeah. And conversely, long upper wicks. They tend to suggest pretty heavy resistance. Sellers took control, pushed it down from the high.
Makes sense.
But, and this is important, you need confirmation. It's not enough to see it once. You're looking for at least 2 or more rejections from roughly the same price area.
2 or more bounces or pullbacks?
That's how you validate the zone. It shows the market is actually respecting that level, testing its strength.
Okay, that validation part seems key.
Yeah.
So spotting them is one thing, but confirming, how do we really make sure these zones are solid? What's the best practice there?
Great question. One of the biggest helps is perspective. You need to zoom out.
Zoom out?
Yeah, look at higher time frames. Daily charts, 4-hour charts. Confirm those zones there.
Why does that help so much?
Because a zone that looks maybe significant on a quick 5-minute chart might just be noise. But if it holds firm, if you see reactions on a daily chart, that tells you it has real historical weight, psychological importance.
Like stepping back to see the whole picture, not just one tiny detail.
Exactly that. You get a much more reliable view.
Okay, but things change, right?
Okay.
What about when, say, resistance doesn't hold? I found this next point really fascinating, the idea of a flip,
The flip, yeah.
where resistance can actually become support. How does that work? It sounds a bit counterintuitive.
It does, but it's a powerful market dynamic. Basically, once price breaks decisively through that resistance level, that old ceiling often becomes the new floor.
The ceiling becomes the floor. Wow.
Yeah, and our sources highlight this. That flip is often a really strong signal that traders, like options traders, can use for directional bets. They anticipate a continued move.
So a breakout isn't just noise, it's a potential new setup.
Potentially, yes. And there's another layer. The more times a zone gets tested without breaking, the stronger it becomes.
Until it doesn't?
Right, until it finally breaks. And that's your potential breakout moment, possibly signaling a whole new trend starting.
Okay, so let's try and summarize this for everyone listening. What are the key takeaways here?
Well, first, think zones, not just lines. They're dynamic battlegrounds.
Right, dynamic zones. And watch those candle wicks for clues about strength.
Definitely. Remember the confirmation rule, too. At least 2 rejections. Don't jump the gun.
And always zoom out. Check those higher time frames, like daily or 4-hour, for reliability.
Crucial. And finally, that flip concept. Broken resistance becoming new support. That's a key pattern to watch for.
Understanding all this really gives you a much clearer view of what's driving the market, doesn't it?
It absolutely does. It helps decode the price action.
So as we wrap up this deep dive, here's something to think about, maybe a bit provocative. How might this whole dynamic, this idea of support holding firm or resistance finally breaking, how might that apply beyond just financial charts?
That's an interesting question.
Yeah, think about patterns in your own life or work or other fields. Do you see similar points of resilience, similar breakthrough moments after repeated tests? Something to mull over.